Oh my goodness. Morning, everybody. How's it going? How's it going? Indeed. Goose, good morning. Alan, Philip, Larry, Francois, Andreas. You know what? If you're new here, give me a shout out. If you're not subscribed, to give me a shout out, you're going to have to subscribe right over here. Click the subscribe button. A few seconds later, you can chat on the live stream with me. The only thing I've heard is Safari doesn't seem to play well with YouTube. But other than that, come chat with me. Give me a shout out that you're brand new, that you never watched one of these before. I'd love to welcome you. And Wrongamer, welcome. Merle, Infinity, Laura, good day, everybody. Svinborn, how's the weather out there? Up in the, I don't know. Is it how's the weather up there in Iceland? I don't know how to even put it. Yeah, I don't even I hadn't can't even think of how to make a joke out of it. Anyway, welcome everybody. So glad to have you. Glad to have you. It did get a little cooler in here. So last week it was like 85 in my office because the overnight low was like 60 degrees, and today not so warm in here, and overnight low like 30 or something like that. So, anyway, good morning everybody. Jerome Powell speaks at 2:30 p.m. Before that, though, the FOMC ends and they put out their like notes and well, not the minutes, but they put out the announcement at 2 p.m. So that's Eastern time. If you don't have like a thing on your phone that says, "Hey, get ready," and you're a trader, you better consider it. Yeah, I'm glad you liked the monster today. Jerome Powell monster. That's the best I get. I did like 40 of those, and that's the one I got for today. He's kind of reminds me of the what was the Mii's on Nintendo Wii. They had the little Mii's. It's kind of what a Jerome Powell Mii is what I would imagine. Goose thinks I should get one made of me or drawn up so that so I could use one of me. We'll see. We'll see. So welcome everybody, and Boeing didn't really drop, even though they kind of admitted they cannot forecast the rest of this year. So they're just kind of hovering up 5 points right at the moment, and we can, I guess, pop over and kind of start talking about it. And Boeing just kind of sitting there, and I do expect them to push on down lower. Maybe not today, maybe not tomorrow, maybe on the FOMC at 2 p.m. We'll see. So let's be honest about this. What can the Fed do that makes the market go up? I welcome it in the chat. Cutting rates is not bullish. Hate to tell you. It seems to me that the reaction is stacked for going lower. Now, we may do some ridiculous explosion higher again, like we did last time. Entirely possible. But if I'm neutral to bearish right now because one, we've gone up a crap load. I mean, this is ridiculous. Okay, this was straight up. Now, could we do a blow off top where we just keep on being ridiculous? Absolutely. Absolutely. Is it the high probability thing? No, not at all. And I mean, as I've talked about for all the freaking time, the Fed chases the market rate. The market rate's already dropped, but we're still in the range. We set this kind of range back here, and we're just hanging. The logical thing is just to hold sideways. Now, the Fed is gonna they're changing their guidance for banks. I showed Goose this last night. Yeah, cutting rates isn't bullish. Cutting rates is very bearish. That means something's wrong in the economy. I mean, all you got to do is zoom out. Look, every time they cut rates before, That's all you gotta do. Zoom out. What happened in the early 2000s? What happened in 2007, 8? What happened 19 into 20? Were any of those instances bullish for the market? Anybody? I don't believe they were. So they'll just set the rate and leave it. Well, I mean, there's a huge difference between lowering and cutting, but remember, the actual rate takes 2 years to trickle through the economy. We're just sitting here. We haven't even gotten this. Look at where the first rate bump was. 2 years into the economy. My watch says January 31st, 2024. So March 2022, 2 years, that'd be March 2024. That's when the first rate raise has fully trickled through the economy. We haven't even got there yet, but they're looking at doing something else. This is going to cause a problem. This fastest rate raise in history. We haven't paid the piper yet. I'm just saying, just be careful. Ted says, don't both lowering and cutting reduce the interest rate. I mean, so here's the real rate. The real rate's already gone down. The Fed rate is just a bullcrap thing. The real rate right here has already come down. It hasn't broken the range. If we get below, now here's if we get below this, the Fed's going to cut rates right there. And this is DGS2, constant maturity rate. If for some reason this breaks out and starts running, the Fed may increase rates. Now, they changed their guidance for banks and said that they need to, if they get in a financial jam, I was talking about there's no get out of financial jam free card. So the Fed, though, is regulating banks so that the stigma of tapping their emergency lending facility is not a problem. Now, the thing I see here is that they're already softening up that facility they've created last March to save, to provide liquidity to some of the banks that they can tap at will. That was supposed to end, and it was supposed to be a 12-month temporary thing. But their Fed guidance right now that they issued yesterday or 2 days, or maybe it's Monday, says that they need to tap that facility if they're in a financial crunch. Well, if this facility is going away in March, so the Fed's already setting up. This is the Federal Reserve, the Federal Reserve, not the U.S. government. This is Federal Reserve providing guidance to banks that they need to tap that emergency lending facility, and if they're getting a financial jam. So they're trying to remove the stigma of that so that they don't get as punished by the stockholders. Well, hey, if your investment needs to tap an emergency lending facility to stay solvent, I think there's a problem. That's not the kind of investment I want to be in. So you can tell me what you think in the chat. But we're coming to the end of the facility, and every week we keep setting new highs on the amount of banks that have borrowed from it. So it would not surprise me to extend that facility. I don't know. We have a financial problem brewing. It's showing up right here. Every time in the past we've done this, in my trading history, every time that the orange line comes over the blue and we hold sideways, a financial crisis shows up in the market. Showed up right here, showed up right here, showed up right here. You think this time's different? I don't. Now, I just don't know if we do it if this is the financial crisis or if we go up here and do it from up there. And I don't think they've tamed inflation. And the more that they spent, the more they use government spending to patch up GDP, the bigger the inflation problem gets. That's the whole big problem here. That's the whole big problem. They keep using government spending to make GDP positive. You know, real commercial output is negative. It's been negative for probably 6 to 8 quarters, maybe longer than that. And they're patching it up with government spending. That's why we had to pass that $2 gazillion Inflation Creation Act, and the infrastructure, whatever, more inflation, Infrastructure Inflation Act. We had to pass those so we could keep the GDP numbers rocking. That's what they needed to make GDP positive. You think about it, don't let the wool be covered over your eyes. Like, the financial crisis is showing up right here. Now, is it going to happen here, or is it going to happen up here? If we start going up again, it's going to happen up here. If we don't, if this just keeps hanging right here, it's going to happen sometime right over here. One of these months. We typically don't go longer than 6 months before it starts showing up. So if we look at this 6 months from right here, right there, we're right at it. Could it go 9 months? I mean, typical, we could go longer than normal before it actually shows up. Just warning you, there's something brewing. It's there's not going to be a soft landing. So, hate to break it to you. What are they going to do? More than likely hold sideways until something breaks. If you can almost set your alert right here. If this DGS2 breaks below 375, not going to let me do it. This DGS2 breaks below 375, then game on. They're going to cut rates. It's not bullish for the economy. It's not going to be bullish for the economy, so be careful. Be careful out there. I don't have a lot of economic history in my knowledge base for this stuff back here, so I don't talk about it. I remember this, I was trading. I remember this, I was trading. I remember this, I was trading. And I'm right here with you right now. I don't think this is any different. Anyway. All right, so how do you build this chart? You load up the DGS2, and then you click this plus button right here on TradingView, and you type FED FUNDS. Right there. Fed funds, FED FUNDS. And that puts the orange line right on the chart. You can change it whatever color you want. Mine's orange. You can change it to whatever color. There you go. That's how you build that chart. What do they represent? That's the 2-year constant maturity rate. That's the real market rate for interest. That's the real market rate of interest. The Fed funds rate is the Fed funds rate. That's the FOMC rate, Peter. When they talk about the Jerome Powell setting the interest rate, that's the orange line. They're always chasing the real market rate. If you thought they set the rates, surprise, they don't. They chase the real market rate. And there's the market. So I hate to burst the bubble, the illusion that mainstream media, and it perpetuates that the Fed sets the rate. The 2-year constant maturity rate sets the rate. Why did mortgage rates come off the high? Because the 2-year constant maturity rate came off the high. Right there is the mortgage rate coming off the high. Mortgage rates dropped, right? That's why the 2-year constant maturity rate dropped. When did they peak out? They peaked out right up here. Now you know the truth. You can't unsee the truth. Anyway, moving on. Let's talk about what's actually happening today, shall we? S&P 500, getting a little red. We don't typically move much before the FOMC meeting, so this ought to be interesting. Long list of red stuff today. So we're getting a little bit of pullback. We hit resistance. We hit that upside pretty solidly, right at the 1618. That was the most I expected to do. And what do I expect to happen next? Down. See what happens. We'll see what happens. We're already popping down a little bit. We get much below this. Watch out below. The retrace can be vicious. Can be vicious. Now, S5FI. Gotta get my morning list. S5FI. Still hanging out down here. That's showing you as we went higher on the S&P, the S&P making its all-time high, S5FI, the number of stocks above their 50-day moving average, the ones that are participating in that high, has diminished. We're only at 73%, 74% at the close yesterday. Pulling back more today, so this is going to drop. Where's this thing likely to go? All the way down to 20. What's that going to do to the market? Probably take us down. I'm just dropping the truth on you. S5FI tends to oscillate between the below 20 and above 80. I mean, we can go back a long time. Just tends to oscillate between very few stocks above the 50-day and almost all of the stocks above the 50-day. And we tend to oscillate. It's like, can't really use technical analysis on that chart because it's just an oscillator. Oscillators, you can't really use technical analysis. So don't try to, like, when everything's, when you got nails, trying to nail everything together. When you got a hammer, everything's a nail, When you got technical analysis, you try to do it on all the charts, but that's not the way this works. So this is a different kind of index here. And it is an index. You can't buy it. So, but I do keep aware. Like when we're up here, it's time to lighten up. When we're down here, it's time to go shopping. But you got to be careful and smart. It's not just a universal. ES, this one definitely looks cooked. I mean, we do have, when you look at the bigger pullback that we did from this high down to this low, the extension 5150, we're short of that right now, but this move up right here was pretty wicked. We may see another pullback right back to this area right here. Now I could draw this on S&P 500 too. We may see another pullback right to this area. See, I have a giant blue arrow there. May see a pullback back to that area before we can push on higher. Just 2-point tool, that high, that low, right up there. 5184, slightly different on ES because they trade slightly different. ES is the S&P 500 futures. It trades basically 24/7 or 23/5. It's closed from Friday night till Sunday night. Reopens at Sunday at 6 p.m. on Eastern time. Same with all the futures. If you didn't know, that's how the market knows. That's how the pundits know what all the indexes are set to open at, is from the futures market. That right there. Resistance, 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 and pulling back. If we hold here, we could go higher again. If we get below here at all, we're coming back to here. If we get below that one, coming on down. More than likely. Russell, more than like, I mean, we've resistance, 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 resistance. Odds are coming on down. CL, just consolidating right on the roadmap line. That's probably good for a pop. 83 with the upside. I would expect resistance there. Then we come back down to 75 before we can do the next move. If we hold 75, this area right here, we're probably going to go up. If we break down through it, we might go down to 50. That's oil in the short term. If it does something different, I'll keep you updated. Gold, still sitting at that resistance. We were resistance before we popped this little high. Still resistance after that high. Still makes me think we're going to come down on gold before we go higher. Bitcoin, bouncing off of that channel. I was warning about this. I thought it might take a couple more days. We may go on a bigger, deeper retrace on Bitcoin. Be very, very careful right now. If this thing starts, it can go very quickly. It'd be vicious. Same thing with Ethereum, bouncing off the bottom of that. I mean, this is a classic pattern right here where we break down below a trend line. We retrace back to it, and then we get the extension. And that extension, how big would it be? Usually about the same size as that first move off the high. That move right there, projected right down here. See, it puts us right at that. If you want to use a fib tool, it's from 1 point, 2 point, 3 point right there. You can see my dots, 1, 2, 3. If you just want to use line tools, you just draw the lines. Like, you don't even have to use fib tools. You'd be like, well, that high, that low. You can either copy it or you can just move it over like this, and then it gives you a target. Be conservative. That would be the target right there. You would expect it to go to there. Now it may find, don't ignore the fact that the roadmap line sits right in here. We may find support there, or we may push on lower. And we could get an extension down to the 618. Multiple layers and levels here. Now, if it breaks at this point, if it breaks above, just remove, clean this up. If we break above the channel, then the pattern's void. So this is probably a higher probability than 50-50. It's probably like 65, maybe up to 70% likely that we go down, especially if we break below the low. Get below that low. We're coming down to at least here, if not on down. Is this a pattern I like to trade on the downside? Not really. Do I trade it on the upside? Absolutely. Especially when the market's doing it. Dollar, still holding. Still holding. Now, what's the orange line? It's the roadmap line. The link is in the description down below. If you want to grab that, it's like $5. You also get to come join me in Discord. I mean, pretty sweet deal, I think. And I give you a list for like 3 months. For that $5, I give you a list of stuff that's bouncing off that roadmap line. Usually bullish. I like to trade bullish trades because you can buy shares. But I give you a bullish list every week for 3 months for $5. And if you want the whole year, or you want to add a year to it, it's like $19 more. Heck of a deal. Heck of a deal. Probably the best investment I have going. If you want to invest in something that is super helpful. See, we bounce off of it all the time. Works on all time frames too. All right, what's actually moving today? SYK, look at that pop. Right up to the target, 342. Watch for resistance at that price. We may turn back down, come back down. Yeah, it's a must-have. Hey, Arthur, glad to have you. Glad to have you. All right. Oop. Powell Industries. Look, there it is again. Right down to the roadmap line. Pop up, 1618. That's resistance. Could it go higher? Yeah. They can always go higher. But once, I mean, that's, where was your entry? You didn't have one there. That just popped in right to the target. Nice. Wow. Talk about a beat. 135% more than analysts expected. Beating on the top, beating on the bottom. That was pretty sweet. Now we may run on up 123, 130, 150, 160. If you've seen other people use fibs before, I don't use them the same. Just throwing that out there. Now let's clean this one up. Talk about it. That's been sideways choppy, bull crap. We're just sitting in a range. Look, this is years. You know, all last year, just hanging out sideways. I wouldn't mess with that. Got significant resistance where we couldn't break above this zone right here. COR, nice pop there. Man, ridiculous pop. Let's see where we might be. Find a resistance. Could be up to 252. Everything's looking really crazy. That's why I'm very concerned. Like all these that do this, I mean, even normal stuff like Nvidia doing ridiculous stuff. And Microsoft up to resistance. Why did it pull back on earnings here a little bit? Because we're sitting at this 1618. Could we go on higher? We could. Odds are, though, we're going to break down and come back. And it's not going to make a lot of sense for a lot of people. All right? Think about it. Earnings don't bottom until usually 6 months after the chart bottoms. This is why it doesn't make sense to a lot of people. All right? Like the crappiest earnings don't usually occur until about 2 quarters after we made a bottom in a chart. And then the best earnings don't usually get reported until about 1 to 2 quarters after we top in a chart. If we start down, that best earnings will happen over here. And then it'll follow up. And then earnings will start getting crappier as the chart goes down. Isn't that weird? The chart usually leads earnings by 6 months. Most people try to anticipate earnings and how it's going to react. If you've ever tried to trade earnings, you're like, I know what the earnings are going to be and how it's going to react. Look what we have here. You know, Apple potentially topping out. They do report earnings later the week. Thursday. Tomorrow. After the close. We can talk about that more later. AMD. That one may be done. All right. Google. That one may be done too. Look at that. Right up to ridiculous levels. Breakout, all-time high. Coming back hard. Fierce. Roadmap line. Back down here. It may arc down as we come down. All right. There were a whole bunch of them off the list. Jump back up where we were. TB. Oh, man. The more of these that go, the more fearful I am for the correction that we're about to get. Race, doing a corrective thing. Support here and support here. Could it break out and push higher? It could. Doesn't look very likely at this point. We've done a very long-term, very bullish move that we probably need to correct back out. Now, we can get extensions. Entirely possible. I'm waiting for this, and then I would consider getting long. Am I trading for this? No, I'm not trading for that. S-Bucks tried to break higher. Earnings weren't that awesome. I was warning that we may reject breaking higher and push down. We do have support around 85 is, 85 and down to, this zone right here, 85, 84. 80, I mean, it could be 86, 87. Somewhere in that zone is where I want to see it, and I might actually consider going long. If it finds support and starts turning back up, it gets back above the roadmap line, all the things that I need. BA, like I mentioned, just chopping in the zone here. We may bounce off the roadmap line again, and it may be a lower time frame roadmap line. That's not done yet. This is not done. Although we could retrace after that big down. We could retrace back up in this zone and turn down one more time. That was one big fast flush, although that would be consistent with a wave 2. We need to go a little lower. One big fast flush. That could be all the retrace we get, and then continue on down. Just be careful. GHSI. Medtech, biotech. I just don't trade it. Unreliable. NEXI. That's another one. PARAA, Paramount Global. Is that one of the subsidies of Paramount? I don't even know. CBS. Yeah. That's like one of the spin-offs of Paramount. Anyway. Nice pop. Right off the roadmap line. Upside 23, maybe 25. NVO. Ridiculous. Potentially breaking into a new channel. I mean, the bias for this one is just ridiculous up. Ridiculous up. PSX. It doesn't matter what Microsoft did on earnings. It doesn't matter. Did it go up like crazy? No. PSX. Watch out for that one. That's exponential. Yet again. SWKS. That looks weak. Probably going to come down. Overlapping. Lower highs. CRB. Another biotech pharma. Be careful on that stuff. I don't like biotech pharma. They don't follow my patterns. That's why I don't like them. They just tend to do their own thing. They'll follow the patterns and then just take a left turn at Albuquerque and do something different. Yet another one, TSLZ. Lots of biotech making the list today. That's another warning sign when there you go. There's another inverse Tesla. Jeez, that thing's crazy. WT, be careful on leverage. That's leverage and inverse. I mean, that's like a disaster waiting to happen in your account right there. Be careful. So there's like 4 things. Low price stuff under $10. Sometimes it doesn't follow the patterns. Sometimes it does, sometimes it doesn't. It's kind of like throwing the dice. Biotech, leverage stuff, and then number 4, the thing I don't like to chase after is China stuff because they don't play by the same rules. So Walmart's it's set up to go up to 175, possibly 182. Earnings aren't for a couple weeks. We may see a repeat of last time where this thing rocks right up to the target, 175, and then drop again. Rockwell Automation looks like it's going down. Low to high. 1.1 number 1, point number 2, 2.2. We're below the 618. Sets the odds. 70% likely to head down to this area right there. ROP. Well, got halfway to the roadmap line. I would expect. Move on down. FNGU. And it's starting to come off the highs. Watch for it to come back down to here, if not down to here. So those are here's the 2 kind of target for a retrace where you might consider getting in again if it holds support. NVIDIA getting a little pullback, but like I said, it's way up there. Roadmap's way down here. And at some point, we're going to be done doing the exponential move. Look how similar that looked before. Look. You see that, right? You don't think we can do that again? Some big move that takes us back down in this area? I'm just throwing it out there. I'm not trading NVIDIA right now. I don't care how ridiculous it keeps getting. This is a bearish trend. Probably going to go on down. TER. Sideways choppy bull shirt. Oh, man. Don't mess with stuff like that. SMCI. That's another one. They just sell servers. Like, that party's going to end. And it's not going to end very pretty. Let me go buy. Let me try to buy some position down here that would be wicked profitable if it dropped out. Meta. Target's up there. It's doing an exponential thing. One of these days, it's going to pay the piper. 464, 465, the upside target there. One of these days, it's going to come down hard again. MDB. Just chopping. If we can break out 470, 510. Support down here at 360. MSTR. Just chopping with Bitcoin pulling back slightly. That one, it's not the conservative entry is up here above 625. This is very aggressive to be in here. It may fail and go lower. I'm in shares. Google. Like I said, probably coming down here. AMD. It can go on extensions. I have a target up here at 220. But it went pretty exponential, a little bit crazy, and at some point, it's coming back down. SOXX. Probably going to come back down if NVIDIA and AMD and some of the other semiconductor stocks give it up. Lulu. Probably coming back down to the roadmap line. That's an echo of prior pullbacks, and it would not surprise me one bit to come back down to 427. Snow. Would not surprise me to come back down. We kind of hit resistance at 207 and have rejected it so far. If we can get above it, potentially up to 226. There you go, 226. DPST. You may be like, JT, I don't believe your technical analysis mumbo jumbo. That's cool. I tend to get it right more than I get it wrong. And I didn't even do the disclaimer today. I mean, just throwing it in here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I've gotten it right in the past doesn't mean I'll get it right in the future. This presentation here today was intended to be informational, educational, fun, and entertaining. Not a recommendation to buy or sell anything, financial instrument or otherwise. Don't buy stuff from gurus. Don't buy stuff from so-called gurus. Don't buy robotic trading systems. Don't buy stocks. Don't buy options. Don't buy bonds. Don't buy Forex. Don't buy futures. Don't buy cryptos. Don't long them. Don't short them. You're going to lose money. All trading involves a substantial risk of loss. If you desire personal financial advice, you got to hire and consult a financial advisor that you trust, which is not me. I'm not giving advice. So, DPST, watch out. That's might do a deeper retrace back down to this zone right there. Tesla. I'd like to see it get bullish, but right now we're just chopping right above the target there. I had a 180 target. We missed it by 6 cents. I'm going to be bummed about that for a long time. If we don't ever hit the 180. I mean, I was looking for 180 since back here in July. I looked for 180. And we came up 6 cents shy. Are you freaking kidding me? I did buy at 181, but I got another order sitting at 180. I don't know. I like being right to the penny. Call me crazy. Mod. Well, That could be all the pullback that does if it's going to do another extension. That's an echo right there for those of you that like echoes. 72, 75. CRWD. In fact, let me go back there. That pops above there. I may put a alert on it. CRWD. Big turn, big picture, probably going up here. Local picture, that's getting exponential. Watch out for a pullback to charge back up so we can push on higher. D-Dog. Now, I talk about everything being extended. It really is extended. And normal price action needs pullbacks to flush out weak hands, recharge a stock so it can go higher again. Otherwise, we just grind and grind and grind and grind and grind and grind and grind. It never gives you that pullback entry. It just keeps people out. And it's really frustrating to trade that kind of market. I like to wait for the pullbacks and get in. And it's been very, very lucrative for me to just wait for my setup. I'm not saying that my setup's for everybody, but it's been very lucrative for a lot of the people in the chat. You can let me know if you appreciate that and my patience for waiting for awesome setups. D-Dog found resistance at that 128, 1272, 128, and pulling back. Potentially going to move up to 141. EXTR. Heading for the target. Right down there. $9. Pretty much a dumpster fire. MYCB. Another one dropping out. Looking like crazy stuff. That's not the sign of bullish, awesome stuff right there. Ugh. Moldles. That's just choppy, man. That's not the kind of breakout I'm looking for. I mean, smaller term, just focusing on the recent price action. We're right up to the 1618. May retrace. If it holds here, we could push out higher. If it holds that 100%, see that consolidation that happened right there, and then we popped. Retrace. That could be all the retrace we get. It may go a little bit lower. This is very, anyway, I can zoom it up so you can see a little better. So we did this retrace back down to here. We popped that 1618, retraced it back off in one big move, popping back up. Could go on extension 78, 79. It's hard. That one's hard. Everything's being irrational. Western Alliance, probably going to come back down to the roadmap line. Amazon. For those of you that follow me, how long did I say we were going to 160? I thought we'd do it by here. It just took an extra 6-7 months to get there. Now, I kind of expect us to come back down. I mean, I was all the way back here. I was like, we're going to 160. We're going to 160. I had the target over there. I drug it over till we got, watch out for the pullback. That's that was the target. SMH. That's getting ridiculous. And there's so much ridiculous stuff. USD, that's semiconductors. NVS, probably going to come back to the roadmap line. Yeah, probably going to come out. Like that's coming back down would be what I would expect. That's a biotech. Ryanair Holdings. Have the adjustment turned on. I don't even remember what I drew that line on there for. Watch out for this one to retrace deeper. May come back into this zone here. Coin. I really want this one to flush one more time. 1, 2, 3, 4. Ooh. We'll have to look at that one more deeply. That could be, if we flush one more time, that could be the first leg down for a longer downtrend. And AMSC, American Superconductor, Superconductor, that. Next time we break above this, we're probably going up to 20, possibly 24. Does have significant resistance, built up, but we may pop up there. And bias for the day would be caution. I think the Fed reaction might be down regardless of what they say. It may not matter. Hold rates, raise rates, lower rates, whatever rates, it may not matter. We may be in for a big reaction down. Please be careful. Please, please, please be careful. If anything I said was positive, give me a thumbs up. Give me a like on the right down there. Give me a like. And I appreciate it. Thanks for coming in, everybody, today. I'll be in Discord all day, especially for the 2 p.m. Otherwise, have a great day out there. Stay safe. The account you save may be your own. And remember, if you're super bullish right now, be careful. It's not being wrong that costs you the money. It's staying wrong. Don't stay bullish in the face of a big correction. Likewise, if you're bearish right now, don't stay bearish in the face that we're going up higher. Thanks for coming.